Good day. Ira Epstein with your agriculture wrap-up, and this is for Thursday, the 27th of February, 2020, about 5:15 p.m. So what you're seeing behind me is the reopening of the markets actually for the Friday session on the financial. I just wanted to give you this point of view as to what these markets are doing right now, because you're in a state of panic over the COVID-19. It's not a normal thing. It's a state of panic that's hitting the markets, and that's what you're having to deal with. We just had the largest historic break in points in the Dow, and I believe it was the S&P, it might have been some of the others, and we've had the quickest 10% correction from a high to a low that I recall. It might have been historic as well. When you look at the grain markets, and you'll see in the meats, everything's under pressure. Beans held up actually well today, but tomorrow, who knows? I mean, what do you need if people are just going to stay in and they start panicking? That becomes the question. And when we take a look at a weekly chart of closes, you can see how the market's been working down. But folks, this market hasn't given up this area just yet. So the 870 area is still somewhat of a support, and that's right through here. Let me get to that exactly. This settlement was 872.5, and you're just slightly under the one that was back there, if I'm correct. So if you rally, resistance 906, take out the 870 area, let's call it, you're probably into another correction leg. Maybe you go down to the support back here. That's the guessing. When we take a look at the daily charts on their own, let's applaud soybeans. They did well. They were up actually 3 cents. They did make a lower low on the day, though. So the trend is still down. You have lower highs, lower lows. That's what you've got. The market fought its battle at the 18-day average, is still fighting it. I think the pros are probably selling and defending this area of 896.5, but if you get over 899, for whatever reason, that breaks the pattern of lower highs, lower lows. You'd actually enter a pattern of a lower low, because today's low of 870.5 took out 878. 879.25, you'd have a lower low and a higher high. So that's what I think the pros are defending. When we look at Bollinger Bands, if it's not evident to you, let me make it evident. The market has hit the lower bands and it's finding support against it right now. It's also developing, notice the sideways action that the bands are doing. So the market, after this big break, and this was a sizable break, is actually going sideways, looking for its footing. Doesn't mean it'll find it, but it's looking for it. When we come to the slow stochastic, it is neutral now. So instead of pointing lower, it's flattened out. Trend down, bias down, momentum flat. That doesn't mean this market's still not bearish. I think the bears have the edge going home unless the market gets over 899. In the soy meal, look at this craziness in 2 days. We had gone, and remember, I had an eye operation, so I haven't been here for the past 2 days for you, and I apologize. I'll be out in the morning as I get one final check from the surgeons, and I should be fine at that point. And I'll be here doing your afternoon weekend update. But higher high, lower low, coming back towards the 18-day average yesterday, right up to the Bollinger Band, and pushing through it. What I wrote in my newsletter today was that for whatever reason, we seem to be finding a value area in meal and soybeans at the Bollinger Band now. We're also developing that sideways action. So that's not bad action. Soy oil is not in that league. The market is still pushing under the lower band. It gets over it, gets back under it. It settled under it today. Yesterday, if you take a look, the market was under it. The day before, it was under it. And right here, the market was under it. So you got 4 days in a row. That's really pushing it. You can get to that fifth, but after that, you want to be looking right now to how the market gets to the right-hand side of the band. That's not a trend change, just to the right-hand side of the band. In the corn market, things are looking bleak here. You are oversold, but you're just in a solid downtrend. And we can look back, and I think you'd agree with me, since the beginning of February, this market's not been able to get over that 18-day average on a close. That is the area where the bears are still defending the market. Is it getting excessive? Who knows? You know, if you're not doing export business, I hear that the U.S. has more chicken in frozen storage now than maybe ever before, because our export market isn't there right now. Well, what happens with everything else that needs our grain? That becomes a big issue. You've got lower highs, lower lows. Again, wheat does compete with corn at certain price levels as a feed grain. Sugar market, boy, you all of a sudden, I went away and the market was holding that 18-day average. I didn't come in Tuesday. Market still held it. Watch. Now you got your bear trend. Look for the lower Bollinger Band. You hit it. Now you've hit enough in an oversold market. I would not be surprised if, other than the COVID-19, that this market tries to put in something here of a support. Coffee market. Now it gets interesting in America. If the disease spreads to America and people stay at home, what happens to our Starbucks and our coffee shops here? We already saw what happened in China. I am not saying America's going into quarantine, but once the disease starts, and it starts getting in city after city, and I personally expect that it's going to do that. I hope I'm wrong. I want to be wrong. Well, people will stay home. I've got to tell you another thing with all this craziness. My age, I've seen polio, chicken pox, all these diseases that were terrible, but they end and they run their pattern. The plague back how many hundreds of years ago ran its pattern. I can go to Spain and look at the issues there. These things run their corners, and medicine today is very different than it was then. So as bad as people are panicking, and as much as you'll hear different governors start screaming they need testing kits and so on, I understand it, and they're not wrong. But it's got to run its course. So look for resistance in the coffee at the upper Bollinger Band. Cocoa market coming down rather hard. All these markets, you got to be careful because people are what? They want cash right now, and that becomes problematic. Look at how the meat market just falling apart all of a sudden. Lack of export business again. Hog market. You had an outside day up yesterday. You know what I preach. If you take out the low of an outside day up within 2 trading sessions, the market looks for the closest underneath it of a moving average. I don't have that. They're over the market. Or the Bollinger Band. That's what I think this market's got a shot at. I wouldn't want to see it get back over that 65.87 if I were in the bear camp. So you put it together, you try to come up with a game plan, and even with my bad eye and the operation, each morning, I'm a trooper, I recorded my morning subscriber video. So I did get that out for my subscribers. I couldn't write, but I could see a computer screen, which was strange and fun. The only day I couldn't do it was Tuesday because they were operating on me at 7:15 in the morning. Barring that, I think I even got it out before I left the house. I'm not sure. I think I did. But you put all that in you and you don't know what you're doing. As you can see, 40 charts on futures markets. I give you each morning. First, the touch of the fundamentals. I get up early and I've read by 4:30, I'm well into my reading. By 5:30, I've read just about everything I want from all over Asia, Europe, have an idea there, and then I bring you to the technical analysis. So we're going to review 40 charts in the morning. But I do them in a certain manner. I'm going to follow exactly the same sequence, and on the bottom, if you go to our website and you view it, there's a scroll bar there. And as you do it, you can move from section to section. It'll light up for you big and bold, tell you what section you're in. So let's assume that you wanted to look at the meats and the grains. Well, maybe you don't want to look at these markets. Go right there. I save you the time. You can jump around is the point. Do I charge for this service? You betcha. I'm not getting up at 4:30 in the morning doing it for free, but I also want it to be very inexpensive. So it starts off at $7.95 for the first 30 days. After that, you can decide, number one, to quit. You can decide to stay with it. If you do, it's $15 every 30 days thereafter. It's basically just around a tick in gold, silver, the S&P, or you can go for a 1-year subscription, pay up front the equivalent of $13 a month, $156. You're going to find that with it, what I'm trying to do is offer you what you might be looking for, some trade, some ideas. There are many times I say put your hands in your pocket and do nothing. How do you get here? Go to www.iraepstein.com. Go to the word research on our website. It has everything you need there about it, and maybe I can help you question and answer the questions about your own trade selections. I'm Ira. Have a good day.